Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, I just want to address the question where people are asking, is this pump real? Is the pump real? Yeah, the pump is real. I mean, we've got a pump, so this is a real pump. And I think you guys have to, rely on your indicators a little bit more. I know that price action can get pretty scary, and a lot of people pride themselves on basing all of their decisions on price action, but you have to also have a little bit of confluence with some indicators in order to really build that confidence. And then if you also have a greater context to the market, then you should understand what's going on. So let's address those three things, right? So first of all, on the price action, obviously we've just been in a downtrend, and as I marked out before, we had this kind of channel. I mean, it doesn't really matter how you draw it. There's a million ways to draw these things, but the way that I saw it is we were in this downtrend, right? You could also have a horizontal channel, and that would have worked fine too, right? So, but basically, price action was marching down this down channel, and that had been going on for several weeks, and we started to have a breakout. And on that breakout, you just wanted to see a little bit of a pullback. We did have that little bit of a pullback on the lower time frames, and then we just kept shooting up. So it was obviously a bullish breakout. And this is one reason why I always emphasize that if you do find a channel, if you do find a range where just trading is going really well, where it's just, up, down, up, down, up, down through the whole thing, then you're just going to want to buy at support and, have a stop loss that's reasonable under support, whatever you can tolerate. And then if you do have a breakout, you get to have the benefit of not only the entire range, but also the breakout, right? Whereas if you just trade the breakout, then there's a chance that you can get rejected by some of that higher resistance, and then you may break below, the point of entry. So, guys, try to practice some bravery and buying at support, and that will, serve you better. But you don't do it just at any support. You do it when you see that you have a clear range or that you have other factors going in your favor. So, what were some of those factors that we had going in our favor? Let's go ahead and mark some of these things out because I think some of you might like a little cheat sheet. One of the best indicators, in my opinion, is the daily MACD, right? So, the MACD often starts to change the momentum early on compared to many of the other indicators. You can kind of see this was very deeply red up here on the daily, and then it started to soften almost immediately after that first touch. And so that was a great indication, like just right there. I'll just mark it as blue because it's not really a green signal, it's just a positive signal that we went from dark red to pink, right? And where else can we see this on the chart? We can also see this right here. We can see it right here. Let's see, just mark all of these out. For this one, it's a little bit more complex, so just gonna skip that. But let's go back here into summer where we can see this over here. And then it actually fired again. Pardon me. And, these weren't very big, relative to the, to the moves around it. But you can see that we did have these, major transitions from dark red to pink. And you know what? I might as well just do it here. I'm not going to hit every one in this area because it was just so complicated. Just the major transitions there. So just on the face value, were these good signals? You know, was the MACD a good signal on the daily? In general, you know, yes. You know, we eventually came up and took out or were even to wherever you would have bought in here. Same thing here. You got a nice pump, and then it did turn around again. Same thing here. You got a nice pump, and then same thing here. You got a really nice run. Same thing here. This one was a little bit more muddied, so it wasn't the greatest signal. And then this one, you could have broken even, or you could have had a nice run, just depending where you bought on that signal. Same thing here. Nice run here, nice run here, nice run here. Little one, kind of risky one. And then we're also having this one, which is actually a fairly substantial pump. All right. So from when that signal took effect to now, it's at least 15% pump, right? So that's really good so far. So just using the MACD, you're already better. You're already more confident than you were if you were just looking at price action alone, because price action was in a downtrend, but your MACD was telling you things were looking okay, right? So now you have some type of a conflict between price action, which was working its way down, and then the MACD. So you might want to throw in another signal in there, right? Well, the one that I would suggest is you using the RSI. And so let me go ahead and put the labels on the chart here. And so the RSI is this one that I have marked out in green. And whenever it's below this red line, you know, approximately 45, approximately 40, you know, you can just consider 40 to 45 on this scale on the side of it. You know, if you're below that, you're in kind of a bearish control zone. And if you're above 65-ish, right, you're in kind of a bullish control zone. And then, of course, there's a middle, right? So if you're in the bearish control zone, it's not really, you don't really expect pumps on the price chart, okay? You really just want to see if you're moving up steadily. If you're moving up steadily, that's a good sign. So what did we have here? We were underneath the moving average of the RSI, and then we started to kind of sit on top of it, and that was a good sign. So we can put, let me go ahead and put a different color for this one. Something still relatively positive. Let's just go ahead and use kind of an orangish color. So we had a nice, you know, breakout over the moving average there. And then we had one here. And then really, this was already on top of it right here, but we got on top of it a little bit. I think I can just put these in the same area pretty much. We almost broke down into the bearish control zone here, but we did rebound off of it. Had nice signal here. Had one here. And then this one was a little bit muddy, you know, back here. And this was a bit muddy. So again, like you don't have to take every move, but because you don't have to actually be continuously trading. But if you are relying on these indicators to help you out, then you can see where the RSI is approaching the EMA and starting to cross over, and that can give you a good indication, right? So let's just see back here. There was one here. That was a nice one. Here was one. And then, of course, this one right here. And if you had caught that one, congratulations. Right. So you're in the blue, right? In the blue, your MACD said, okay, be on the lookout for your RSI. And then your RSI said, okay, take, potentially take this move. Here's another one right here. Potentially take this move. Potentially take this move, right? You could, I mean, these ones were kind of choppy, but this one was nice and strong. And so, you really had a lot of good trades in that area. Same thing here, fired there. This was a little bit more muddy. And so if you had been relying on these indicators, then effectively you could have been very successful in this entire range. Okay, that entire range was already good for you. Uh, this was complicated, but this was very obvious. This was a very bullish signal on your RSI. And then you had another one that kind of carried you to the top. So you could have played that quite well. And this was obviously not the best run, but you could have at least broken even off of that. Many of these you could have just broken even following these signals. The question of where do you get out, that's a totally different question, but we're just asking, should we be in this trade or not, right? And so I'm just going to ignore a lot of this area just because, a lot of it was just break even. But then we got into these, these areas where you really did have a nice run. And then you can see it broke down, right? It broke under the EMA, and then you would have gotten out. Or when you saw it about to pinch, you could have front run the signal. And so you could have caught this one, and you could have caught this one too. Right? And then it crossed down. And this one was very muddy, so I just won't count that. If it's really muddy and if you're re-entering the bearish control zone, like these ones were re-entering the bearish control zone, you don't have to take those. You see all of this price action right here is actually re-entering the bearish control zone. So we probably just wouldn't even take those trades. Same thing here. It's just skirting around that bearish control zone. So you really didn't want to take those trades. And same thing here. And even all the way until where we are right now, no one could blame you for not taking that trade yet. We did have a good signal. So here's the thing. We had the signal. We had the signal from back here. And it was basically saying that we can take the trade if we want to. If we want to risk it, we could take the trade. And it's only here that we're starting to get out of the bearish control zone, but we did have a nice bounce right there. So I'm actually going to move this all the way over here until we had a nice bounce off of this thing and turned upward as opposed to rolling over. And then I will put this type of green area here. So we could have caught this move. It was a little bit muddied because we've been in this bearish control zone. And so what else could give us confidence? Well, we could also go with the Stoke here. And so was the Stoke turned up? I would just say yes. Let's go ahead and mark that with, let's say pink. Let's get a nice thick one there just to show that we had an okay to go. And then that was just up. And, it was basically, middling around until we got to this point right here. I mean, we obviously broke down several times on the Stokes. The Stokes can give you an interesting idea of when to get out also. When it crosses negatively, you can consider to take some profit, right? And but anyway, we got over here, we crossed positively again. We crossed positively here. We crossed positively here. We crossed positively here. And so all of those were giving us confirmations to just play these moves, right? And you could have played these little intermittent moves also using the Stokes and also using the RSI. But in general, you can see the big moves, right? They worked pretty well. And so I honestly don't need to mark all these out. You can see like every single one of these where there's an orange one, the Stokes is also firing in a positive direction. So where did you have, a nice positive Stokes firing here? It was down here. So that was another confirmation. So we actually had this line over here, and we also had everything lining up. Like all of our indicators were saying it's okay to buy. All of them were saying it's okay to buy once we bounced off of that 25,000. Like we really had signals it's okay to buy. And even though the price action was in a downtrend, all of these indicators were just constantly expanding. And then, we did have some contraction on the Stokes here, but it did eventually turn around yesterday, right? And so that would have been your indicator if you were using the Stokes to get back in, if you had just gotten out really briefly on this kind of fake out dip to try to save yourself some of the pain of that dip. You might have gotten out when it crossed negatively, but then it said get back in, right? And so if you had gotten back in, the rest of the indicators were still bullish. And so if you were using your Stokes as just kind of, extra confluence, extra confirmation, then the Stokes could have saved you some pain on this drop, and it can also have told you to get back in as long as these other signals were still valid, all right? So just delete the Stokes from there. I'll just put it here. And now we have this kind of expansion set up on the BBWP, the volatility indicator. And while that's direction neutral, we could slam down. As long as the Stokes is pointed up, most likely we're going to expand in the upward direction. And so you can see the Stokes is getting a little bit high up there. This tends to be an area where it rounds out, but it can actually stay in that area for quite a while, longer than you think. And so it can put in these tops that still continue to run up, right? So it topped out right here, which is actually right here. And then look at this, the price continued to run up, even though it was topped out and the Stokes went flat. And so just because our Stokes is topped out and is starting to go flat, it doesn't mean that price is necessarily going to stop. And that's something to remember, especially if we have the RSI finally breaking out of the bearish control zone, and we have the MACD continuing to be positive, and then we have volatility suggesting that we're going to continue to expand, then you can understand that we might have, a green signal, not just this pink signal, but it was also, let's say, a green signal. And so that's what I'm looking at right here, right? Of course, you could just use price action, but again, like most people would have seen this as just a downtrend. and they probably wouldn't want to trade against the trend. And so you would have had to really catch the breakout, right? You would have had to catch the breakout. Whereas your indicators had prepared you here. And again, you also had that additional pink signal over here as well. I mean, these are going to overlap each other. So just put it right here. Right? You also had this. You had the Stokes, the MACD, and the RSI all firing off in this area, and then you also had the BBWP, the volatility, and the Stokes just confirming, get back in. So is the pump real? Yeah, the pump's real. And then, if you even want to go a level deeper, then you can go ahead and take a look at the NAS 100. In my opinion, the NAS 100 is basically to crypto what Bitcoin is to altcoins. Okay. So if the NAS 100 is finding some stability in its chart, then that gives crypto the freedom to pump, right? As long as the NAS 100, or you can choose some other stock index if you don't like the NAS 100. You could choose the S&P, you could choose just the general NASDAQ, you could choose even the Dow Jones if you want. I mean, just personally, I use the NAS 100 because I believe it correlates the most. Has a little bit of a tech bias to it, but the S&P is very popular. Here you can see that we had a nice positive signal back here on the 23rd on both the MACD as well as the Stoke, and then we had a nice liftoff that just headed towards that 40 zone. Right, this was approximately 40. And I have the red line marked at 45, but you could use 40 as basically the minimum threshold. And we're kind of firing up, bouncing off of the moving average at that 40. Go ahead and make that a little bit darker. And so we were basically on our way out of the bearish zone, okay? We were firing back up. We had been dipped down there in these 30s for a while, and then we were starting to fire up, and so I would consider that a go signal. So we have the MACD, we have the Stokes giving us early indications, and then we have the RSI, and additionally the BBWP, the volatility measure, starting to turn up and suggesting that we might expand to the upside. And sure enough, that's what we did on the NAS 100. And because the NAS 100 also had a double bottom, right? You can look at its price action also. Then you could see that it's a relatively stable formation, right? It found support and then it kind of confirmed that support. That's the whole point of a double bottom, right? Confirming that support. And with that confirmation and then these 4 indicators suggesting an upside, you could have gotten in either, front run it on this blue signal here that I've drawn, or you could get in on the confirmation on this green one that I also drew in, right? So that would be your kind of a cheat sheet in terms of how you could play this. Now, if it does end up turning around, what you would be looking for would be across to the downside. So you can see that the Stokes is suggesting that it might turn around. And, we're not really there yet. It really hasn't turned down yet, so we can give it another day or just see how it plays out. And the MACD is still positive. The RSI is just double checking. So we would want to see if it bounces or if it crosses. And then, of course, our volatility is still positive, and nothing's really wrong in the price action. So this could just be a simple retracement. So I'm just going to make this a dashed line right now, just something that we're thinking about, but it's not really confirmed. Whereas all these other ones, they had crossovers, and so they confirmed, or they were, bullishly oriented, right? And also we had this confirmation of the price action. So all of these things together suggested that we would have a nice potential bull run that we could have forecasted on the 23rd, and that at least on the 25th we could have had a pretty good confirmation that would have suggested let's be ready for it just in case it happens. And so again, like if some people are wondering, is this real? Is it not? I mean, you can't really get much more real than this. Um, if you had relied on your indicators to give you a heads up, then they would have told you that this was possible. Now, what else can we see? Let's put on our EMAs, and the EMAs also had, were turning up right after the signal. So in this case, the EMAs were a little bit delayed, but you did see the price action getting squeezed up. And so you probably couldn't have caught that on the daily, but you did have confirmation halfway through the move. So even if you were relying on your EMAs and nothing else, you could have at least seen that there was the potential for this squeeze. And if we go back to Bitcoin to see what it looks like on Bitcoin's chart, you can see the same thing. Um, the price ended up getting squeezed between the 10 and the 20, and now we're seeing it rise. And how high can these things go? Well, if we're not being rejected by the 10 and we're not being rejected by the 20, then potentially you want to at least think about the 50 as a potential next target. Doesn't have to get there, but potentially. And then the 89 and even the 200 is possible, but this would be a pretty good area. The 50 is a pretty good area on the daily to be targeting. You can see like we tend to come up to the 50, then kind of maybe tag the 89. In all of these downtrends, we just come up to the 50, tag the 89, and then kind of continue on our way. Occasionally we get to the 200 or above, but we got sent back down. So you can consider as just targets these type of areas. And if we go to the weekly, you know, it's almost always the case that we do check back to the 10 at a minimum. And here the 10 is at 34,000. And we very often check back to the 20. And the 20 is around 38,000. So somewhere between 34 to 38,000 would be fairly reasonable of an expectation. And so at least I would suggest, I mean, this could continue down. So maybe 33 if you really want to be conservative as a target. But again, like you could go as high as like 35, 36 and, have kind of an ambitious target. And this could turn into a significant run if we were able to close candles above those prices, right? So you can see if we get closures above the 10s, right, above that kind of 37, 38 area, then that could actually prompt a new bull run. But if we just tag it and then come down, then it's going to be just a relief rally in a downtrend, and maybe we have some more downside to go. But again, if you can sit on top of that 10 and a 20, then it could potentially be a nice ride up. So that's how I would target those things. And there's other methods. You could use fibs, etc., etc. But there's no reason to doubt what we're seeing on the charts. And if we look at the weekly right now, we can do the same thing that I was suggesting to do on the daily. So right off the bat, we can see that okay, I need to hide those. Let's just start over. So right off the bat, you can see that the MACD on the weekly is starting to soften, right? So we're going to color that one blue. And that's our first indication for a heads up. And secondly, we can see that we have this, Stokes crossing positively. So that was actually our first indication. It crossed positively approximately the same time that the MACD did. This is the weekly, so I can't really, get too close in there because each candle represents 7 days. And then we have the RSI, pulling up. It's headed, you know, we're actually above 40 right now. So that's a good sign. We're getting out of that bearish control zone. There is a strong potential that we could get rejected. So we haven't crossed yet, but that would be a signal that we would be looking for if the RSI on the weekly does manage to cross, then that would be just a great signal. And I'm just going to color that one, make that one dotted because it's not confirmed yet. And also our BBWP is rounding, but we don't know if it's going to continue or if it's going to contract. And if it ends up continuing, then that would suggest continuing to the downside. And that would correspond to our RSI being rejected. If it does cross its MA and starts to move down to contraction, then maybe we could be talking about some pumpage on there. So the weekly isn't really as confirmed as the daily. And ideally, you would like to see those two overlapping and having the same confirmations. But we do have those initial signals on the weekly that there is some possibility to have a pump that is enduring. There is at least the potential there, not confirmed. But the daily is telling us, yeah, let's go, right? The daily is saying I was ready back here, so let's go. And we can even see that the 2-day, the 2-day isn't quite out of the woods on the RSI. And it's not fully crossed on the MACD. But the 2-day does actually look fairly decent. And so maybe there's a little bit more work to be done. But you can see that between the daily and the weekly, there's a little bit of a muddy area. Same thing with the 3-day. So it's all muddy between the daily to the weekly. And really, we're talking about this potentially shorter term pump, which may suggest that it's just a relief rally, or it may just suggest we don't have enough data in the market yet to have a bullish confirmation. So that's how I would look at these things. You guys can use whichever indicators that you feel, work best for you. You probably only need, 2 indicators, and then I would suggest, you know, using EMAs, just practicing with EMAs. And, the 2 that I would recommend primarily are the MACD and the RSI. And if you want to throw in the Stokes and volatility, these ones can be a little bit tricky. They tend to like hang out at the bottom. They tend to hang out at the top. And They don't necessarily do 100% of what you would expect them to do, but they can give you extra, extra confirmations. And if you at least have them on your chart, then you can slowly over time develop some intuition based upon them, uh, even if they're not necessarily the indicators that you go for first, which might be your MACD and your RSI. And there are plenty of traders who just use the MACD and the RSI, and they don't use anything else. They just use the RSI and the MACD and then price action. And some of them don't even use EMAs. Maybe they use, Fibonacci's instead, where, if you do a fib retracement from like the top to the bottom, you might have these different levels. And you can see like there's this kind of like golden zone here at the 618 around 39,000. And maybe we could we would basically be looking at these same levels: 33,000, 34,000, right? 36,000, 38,000. So, do we bullishly break through this, or do we bearishly get rejected at these different fibs? Um, if you're a fib trader, you can use those, right? You can figure those out. And then you can see that the EMAs, just coincidentally, they tend to line up with some of these numbers. Look at this. The 10 is right here at the 236. The 50 is right here at the 382. The 89 is right here at the 0.5. The 200 is right here at the 6.6, right? And this is, I believe this is the 200 MA. Yep, the 200 MA. So the 200 MA is at the 786. So both of these are good, right? I prefer EMAs because you can see price squeezes to the upside, whereas fibs more are related to the statistical likelihood of finding a point where price may turn around or reject, and finding better entries, that sort of thing. So, with different patterns of trading. So, you can research all of those. I'm just saying that there are plenty of successful traders that don't even use these more advanced tools or these more complex tools. And a lot of them just figure out price action plus the RSI and the MACD, and they do perfectly fine. If you're not using these tools, then you probably wouldn't understand why this is pumping right now. You wouldn't have had any heads up, even though we had a lot of heads up. You just say, why is everything pumping? I went to watch TV. Why is everything pumping? Well, you had a heads up like a while ago, right? What is it? May 30th? We were talking about like May, we were talking about signals on like the 14th or whatever and on the 25th. So we had these signals that were being printed, and if you weren't using these tools, then you couldn't have seen those signals. You would have just been in ignorance unless you were lucky enough to actually be watching the chart when it was breaking out, which, of course, most people probably aren't watching the chart all of the time. But if you are just using price action and you were able to identify this downward channel and have this breakout, then you could have set up, potentially, you could have set up an alert, right? Where if you have this line here, you can add an alert, right? So if you added an alert to it, then let's see, why isn't it popping up? Not sure. TradingView is being a little weird today. But if you were able to add an alert to this line, then when price action crossed it, it would have rang a little bell. And then you could have said, oh, okay, we're breaking out. I'd like to be part of that. So I'm going to enter, and then you can choose whatever confirmation works best for you based upon your, breakout strategy. But I'm not going to go into that. Again, I prefer buying at support. I don't prefer to buy breakouts. And so that's your alpha for the day. Stay safe and happy trading.